Hi, I'm Paul Shantic, Director of the Inflation Sensitive Area. I'm here to give you a quick overview of how the Inflation Sensitive team contributes to the overall health of the CalSTRS investment portfolio, and ultimately to the retirement the California educators enjoy. CalSTRS investments are made up of 7 separate areas that we call asset classes. Just like any large retirement fund, we invest in a wide variety of different kinds of investments, from tradable fixed income and equity assets to private equity, real estate, and inflation-sensitive assets. The role of our asset class is to provide overall diversification within the CalSTRS multi-asset class portfolio, lower certain risks that pervade other major asset classes, and positively capture changes in inflation. As for what inflation-sensitive means, let's first touch on inflation. Inflation is defined as a sustained and persistent increase in the general price levels of goods and services, leading to a subsequent reduction in purchasing power. You and I see inflation at home as rising prices at the store and a weak dollar. The sensitive part relates to how the portfolio's investments react to changes in inflation. For investors like us, the key to making money is to hold investments that have returns that outpace the rate of inflation. We describe typical inflation-sensitive investments as generating reasonable returns above inflation while providing downside protection. We're not swinging for the fences in terms of high return, high risk, nor are we so risk-adverse as to be a consistent drag to CalSTRS' goal of a 7.5% overall return. This approach is unique from other asset classes, and if you were to compare our returns over time to other asset classes, you'd find that we don't necessarily move in lockstep with any of them. We call this uncorrelated, and this approach adds diversification to the overall CalSTRS investment portfolio. So what types of instruments and strategies are in our portfolio? As of this year, there are just 2 sub-asset classes: global linkers, a publicly traded asset class, and infrastructure, a private asset class. Let's start by going downstairs to the investment floor to talk about global linkers. Rosie?
The global linker portfolio consists of notes and bonds issued by developed economies such as the United States, those in Europe, and Asia Pacific. What makes these bonds different is that these are tied to the cost of each nation's consumer goods and services. To use the U.S. as an example, the price of these bonds, also known as Treasury Inflation Protected Securities, or TIPS, is tied to the cost of the Consumer Price Index, or CPI. Each nation has its own agency responsible for issuing these types of bonds, but in general, the outstanding principal of the bond rises with inflation. So when inflation rises, so does the face, or par value of the bond. Once the par value adjusts higher, then the interest paid out by bonds is also adjusts higher. With these features, inflation-linked bonds are able to blunt the real impact of inflation felt by the holder of the bonds. The developed global inflation-linked markets are well-functioning, liquid markets with regular predictable issuance, a range of maturities, and a varied investor base. U.S. TIPS are traded during regular U.S. market hours, while their global counterparts are traded during their respective local time.
Thanks, Rosie. Now let's have Dilashini Senavarante explain a bit about what infrastructure is.
Let's make it simple. So if you take infrastructure as essential assets in our daily lives, so when we get up in the morning and switch on the lights, that's electricity and that's infrastructure. When we open the taps and brush our teeth, that's water, that's infrastructure. Then we take our kids to school and go through roads and pass bridges, that's infrastructure. And then when we come back from work, we take our trash out. Anything to do with waste management or waste to energy, that's infrastructure.
Thanks, Dilo. You may be asking yourself what other types of strategies and investment instruments might we add in the future? Well, right now we're looking at timber, which can be broken down into hardwoods or softwoods, and various sorts of agriculture, which can be subdivided into row crops like wheat and corn, or permanent crops like almonds and pistachios. Different sorts of energy and other types of commodities round out the future possibilities.